Monday, February 5th, market analysis, Stan Ehrlich. Starting a little bit late today, so I'm going to go through this fairly quickly. We always start out with the stock market indexes, and I start out with the March E-mini. Excuse me. So you can contact me at info@ersignals.com. Ask any questions. You want me to analyze a symbol, any market, we'll see if I can put it on the YouTube. That's how you reach me. The E-mini, March futures. I like the other indexes. Basically has an inside trading range day, a doji. Now, it doesn't mean too much. I'm still looking for more of a correction. We had some, in fact, most of what I was looking for at the end of last week, Wednesday, Thursday. But Thursday's close started a nice rally, which on Friday closed totally a new high, new historic high as well, price levels. So I think it's not finished with its correction, and we're going to see it come back down again to the support area. I'm looking for on the March E-mini about 4,844 and maybe down into the 4,720 area. But this is a modest correction in a longer-term bull market. I'm not turning bearish. It's just a correction. Next, Spider, same thing. Looking for a move down to about 480 or a little under, and maybe 466. There is a slim chance it could drop back into the blue zone here and get down to, say, 455. Next, Spider 1 minute. Today opened a little lower, sideways for about half an hour, down to the low of the day. Pretty good break. That was down, I think, 4 or 5 points or so. Came all the way back and now starting to slip again. Momentarily, it's down 1.60. I think it's going to slip again and maybe even make a new low for the day. But in the next few days, that correction, I think, will continue down. Now, we got the DIA. We had a sell signal that did not work on Wednesday of last week. I still, like the other indexes, think that we're going to have a correction back to my support line, which is a little higher. There we go, at about 370, 370 and a half. Now there is a chance that we could come down to the next support area, which would be in the ballpark of 361, 362, 363. Next, Russell 2000 has already tested a second time the support area, but not quite as deep as the last time, which was oversold. The Russell 2000 does not have the same chart formation, does not have the same image, does not have the same criteria. So although I think it's going to slip some, this is a little bit different story. Support is much closer, and it may hold better while the other indexes dip down some, if I'm right, in the next week or so. Next, QQQ. Basically the same as everything else, except it failed to make any follow-through after Thursday and Friday's strength. Friday's high was basically the same price as the previous high of a couple of weeks earlier when it was overbought. So we have the possibility here of a minor double top. If that's true, the downside breakout is the low of last week, and then the downside objective would be right in the area that I want, surpassing maybe 409 down to 406, and I can't rule out 395. And lastly, for the indexes, the NASDAQ QQQ March futures contract, resistance stopping the rally, minor possible double top, needs to break below last week's low, which was a minor test of support at the time, and that'll probably drop it off to the red support area a little lower in the next, get out of that, and in the next couple of weeks. Maybe a little faster than that, but looks like it'll take a week or two. Finally, let's go to the futures. And we start out with the E-mini again, a little bit different perspective. Again, remember, you can reach me at info@ersignals.com. Next, NASDAQ futures, looking for support to be tested, and there's a couple of different levels. Last week's lows, a hair below that, and back down to my most bearish, but I really don't want to use that word, short-term correction level of about 16,400. And bonds, dropping sharply today and Friday, starting this correction, which I think is going to continue in the other indexes. So they're correlating at the moment. That's good. I'm not bearish on bonds, but I am looking for the support area to be tested and maybe even significantly lower. But probably the market's going to try to bottom out around 119, 118, somewhere in there. 10-year notes already broke the lows of this little downtrend. So it should close here, I expect, and continue to break down with bonds for a couple of weeks and then turn back up. Looking for a move down to approximately 109.10, something in that order. Next, we are bouncing off of a minor bull trend line, support line in crude oil. So in a support area, but not that close to oversold. But the trend line and the support area and the fact that it made a new low with a higher net quote at the moment, net change, implies that it's got some bouncing to do, some rallying to do out of the support area. And we might even see it come back up to the resistance level again, 81 something. Not sure about this that much, so I'm going to pass on any other comments, but it looks like it might rally some. Next, natural gas. Support is holding. It's almost unchanged, but a little lower on the day. If support holds, obviously there should be a rally. Probably not just sideways. Markets don't go sideways for very long, I'll tell you that. So if the support hangs in there and we don't start closing below 2.000, then we're going to see a bounce. Probably back up to at least 2.3, 2.3 and a half, maybe back into that very good sell signal that we had before. So that worked great for a couple of days. This was almost the exact high of the rally on that sell signal. That one worked good. That one worked good. That one worked okay for a day or so. That one worked very good. That's a buy signal that worked okay. And there's the bottom of a break with a buy signal. Exactly. Next, heating oil. Sell signal a few days ago, working okay. I don't want this rally today, which we have. It could spell some trouble. But again, our stops come down relatively quickly, and you can control the speed at which the stops move. It's not a moving average, which I don't like moving averages. It's a combination of price movement and RSI levels that control how quickly the yellow stop comes down. Next, sell signal on top of gold, great. Sell signal on top there, great. Bottom green, perfect. Bad signal, lost a little. Green on the bottom, red on the top. Not so good, but probably a loss, small loss. Small profit, not good, small loss. Green on the bottom, red on the top, red on the top, green on the bottom. A lot of great signals last year. Let's hope this year is as good for gold. And silver. Silver, red on top, red on top, red on top. When I mean top, I mean the high day. Red on top, green on the bottom. Not that good, but made a little bit of money probably. And a few bad signals involved. The bad signals don't take big losses. Historically, that's why we have tight stops. And once things start to produce results, good results, our stops move appropriately, put it that way. Next chart. Oops, so I didn't say what's going to happen here. Silver probably going to test the lows of a couple of weeks ago at 22 and then move down to the major longer term support area at 21 and low numbers, 21.1. Next, platinum. Also heading south on the average, longer term trend down, trying to hold for the moment in the green support area, but I don't trust it very much. All of the rallies we have seen, for the most part, with minor exceptions, have not made higher highs over time, and we do have lower lows. So I think this is not going to hold very well if it bounces at all and start to make new lows down to a major support area. I'm looking at 844 and maybe lower. Next, high-grade copper. Looking for support to be tested down to 3.7. Big down days, 2 or 3 in a row. Too bad we didn't get a sell signal on the rally high, but it was resistance area, and it was super, super close to overbought. Remember, this RSI in the sub graph is my custom RSI. I learned RSI from Wells Wilder himself back in the 70s and 80s, and George Lane. I learned stochastics himself, good old friend George, and John Bollinger Bands, and so on and so forth on the lecture circuit for the late 70s, all of the 80s, 90s, and some in the new millennium. Now, neutral to bearish, what can I say on high-grade copper? Soybeans, new lows for the trend. But we have a current quote that's a little higher in the day. We're not quite oversold yet. I think this is going to fail, and we're going to see new lows again easily this week. Next, soybean oil, now oversold slightly, could have a very minor rally. Don't trust it. The trend is strongly down, or very weakly down, whatever you want to call it, and maybe a bounce, but that's about it. The bounce could get back up to 46.70, but I just don't trust it. It just barely oversold, just tiny bit. So looking for lower levels soon, rally or no rally. Meal, trend line's holding, no signals, did not quite get oversold, but close. But that's last week, and it already rallied some. I'm not sure here. I think it's going to start to make new lows soon. Next, corn. Buy signal last week, early. Wednesday, Thursday, Friday, toying with my buy signal that we finally got filled. Now, slightly higher on the day. Actually, yeah, just barely a tick or two. And I think it's going to start a rally from here. I've got to think that. The buy signal's still good. Nothing wrong here. It's just taking a couple days more than usual. And I'm looking for new highs. The rally could get back up to about 470, 71. Wouldn't be surprised to see it get stronger than that. At the most, I think probably 500. Next, neutral to bearish, intermediate, longer term, wheat, except what happens if we start to rally and we start to take out the highs for the last month or so, and then we start to take out the highs at, say, 650. That would cause me to express much more bullish longer-term potentials, but it's not happening. This market is lower on the day. It's close to recent lows. The trend is obviously intermediate to long-term down. Short-term, it's a little bit ambiguous for the last 3 or 4 months. Maybe it's building a bottom. Next, cattle. Today, brand new sell signal in cattle, happening as we speak. I'm looking to go short on a rally back into approximately the middle of today's range. And I'm looking for the support level to be tested, which is immediately below where we are. So I don't think it's going to hold. I think this market's going to break that support level and keep on dropping. I can't rule it out. We could go all the way down to 165. It's 182.5 at the moment. A couple of support levels on the way down. Let's see how this sell signal works out this week and beyond. Next, starting to slip, minor new lows, live hogs, got overbought, in resistance, classic potential turning area, and it has turned. So looking for the next support level to be tested, that would be at 78.70 and a little below. Next, OJ, overbought, tested an old neckline. Normally they don't have any effect on the market after they work and the market breaks out and down it goes. So it's unusual to see an old neckline stop a rally, which is exactly the high of the day on Friday, but it was also overbought and quite overbought, about 90. So no surprise was starting to turn down. As a matter of fact, I thought I was going to do it earlier than this. Now I'm looking for a move down to 348-ish and to the middle of the next support area, 332. Next, cocoa, way overbought, and a blow off top from all appearances at the moment. This should be very close to turning down, could be very close to the high price, and again, should be very close to the time, let alone price, that it's going to start to turn down. Watch for bear signals and a turn down in cocoa coming soon. Next, coffee. Head and shoulder top is still alive, starting to make new lows for a few days. The last shoulder was just a little bit bigger than I expected and a little bit higher than I expected, but now it looks quite viable. First shoulder over here, December 1st. Top of the market, December 19th. A little bit further than to the right than I was looking for, but the body parts of the formation are there. All we have to do is keep sinking. Right now, some support, but let's see how this pans out. You know, if the whole thing does work correctly in the next several weeks, couple of months plus, we should be going down to 146. Big move. Next, sugar to sweet. Bear signal on Thursday. Rallied up to the ER3 short sale price on Friday. Coming right back down today. Perfect. Nothing wrong with that sell signal on Thursday. It's acting great. We want to see it break below this little line across some bottoms. And then breaking below that, which should happen very, very soon. We're on our way down to the next support level at 22.25, and maybe even lower than that. Next, cotton the rag. We could have a red signal today if it'll get below Friday's lows. Doesn't look like it. So I think it's topping out soon, and we may be very, very close to the price level, which is going to generate the high of the rally. Finally, back to the E-mini. Again, you can reach me at info@ersignals.com. E-mini slipping back a little bit. We are now down 120 on the spider, 2.25 or so on the DIA, and only 70 cents or so on the QQQ. Remember, I'm looking for more of a downside correction very, very soon, but I'm not really bearish. I'm just correctionary in a bull market. Thanks for watching. Profitable trading to you. Bye-bye.